welcome back in here, guys. Good morning, good evening, wherever you are. Hope you are having a good day so far. Another pre-market live stream here with the Everyday Growth Advisors, and let's kick it off. Today is FOMC day, one of probably the most important days in the entire year, and also the last one of 2022 as we head into a new year. I definitely didn't expect us to get to this rally and pullback so quickly as we panned out into this week. I put this scenario out on our newsletter for both the bullish and the bearish scenario. We got a huge squeeze into that 4140 level, barely just missing that 4150, which was our target, by about 10 points there. And we came right back down after that, as we were predicting. I was hoping that we would come back down pretty much after FOMC, but it seems like the market has other intentions today, possibly for another squeeze. So yesterday we didn't really play much, but still came out ahead. Very nice plays that we made. I took some nice profits on Apple. I took some nice profits on SMH semiconductors at the open. We played NVDA, Microsoft puts yesterday, and closed out close to about $8,000 on the day yesterday, along with the semiconductors, which was another 7,000, and then Apple for about 21,000 there. So all in all, so far at this week, this has probably been the quickest that I have gotten to 40,000 in this year, and I'm hoping that we'll be closing out the week strong this week. Still a lot of time to go and a lot more trades to be taken. Also, let me know if you think it might be beneficial for me to break down some of these trades and why we took them. I'm also maybe thinking of doing a couple videos like that. If that might be helpful to you guys and you want to know what was the brainstorming before these trades and how we led up to it, or how these trades were taken. You can see a lot of these are staggered in terms of size and positioning, and how they're scaling in and out. Perhaps you want to know at what prices and what levels I took the trades. If you do, let me know. Put in the comments right now, or the chat right now, so that I know that you want to see stuff like that, if it's helpful to you guys. I personally feel sometimes it's difficult to study the post-mortem analysis of a trade. But you know what, if that's what you guys want, I can definitely do a couple videos like that. Maybe on every Sunday I could put out a video that will explain all the trades that I took in the week, how we got there, and exactly what was the reasoning behind them, or the psychological parts of them, how the trades were managed in terms of risk, how I scaled in, how I scaled out, and I can make marks on the chart along the when I've taken the positions. So yeah, if you want to know more of that, let me know. That would be super helpful to know more about risk management. I'd like to know more, please. Okay, cool. So I guess some of you want to know. All right, cool. If we can get enough people to kind of tell me that that's what exactly you guys want to study or learn, then I can definitely do some videos. Maybe every Sunday, put out a video on breaking down exactly what happened, and that can be a little like 10 minutes video breaking down all of the trades that we took. Were those swings? So SMH was a swing, and Apple was an accidental swing that paid off big time because of CPI data. This trade was supposed to be closed out, but I put in my limit order and it never triggered, so I ended up holding the position. So this was kind of a lucky break actually, but this was a swing position that we were holding, which was played out really nicely. I mean, semiconductors, I've been talking about how bullish I am on semiconductors for a while now. So we took the trade when we were pretty much down here, and it busted up, and I closed out the trade like literally when it was about to pull back. I set a stop loss and let the stop loss do the job. Okay, let's cover very quickly what are the expectations for today. So 50 basis point is the projected rate hike for today. 25 basis point rate hike would be very dovish, or it would also show that the Fed is taking a very accommodative stance towards monetary policy. I don't think that there's a high chance for that to happen. I think that Powell's not going to make the same mistake again, where he's going to go soft on the market and then he's going to have to take back his words. As the Fed has said before, they would rather go hard on monetary policy now and front load all of the interest rate hikes and keep the terminal rate really high. And then it's easier to stimulate the economy after they do so. So that's one thing that I'm probably thinking, that Powell's not really going to come off the gate being very dovish. If anything, I think he's going to be pretty hawkish today, and he will keep saying the same thing that he's been saying, that the Fed is committed to full employment, low unemployment, and at the same time he wants to see inflation not being so sticky, and yada yada yada. And I think that's going to be his language for today, so watch out for that language. Things that will make the market tune in dovishly to him would be if he says something about how inflation has slowed down and the Fed is going to take a more accommodative policy or decision making towards policy, in which they're going to kind of wait and observe where inflation is before making the next move. Now, having said that, I must tell you guys that there are a lot of people on social media and all the furus, the usual suspects, and remember that it's not that I'm trying to shit on them, or it's not that I'm trying to be mean or anything, but they keep saying that the market liked the CPI print. What is actually there to like about the CPI print? There wasn't actually much to like about the CPI print. In fact, let me show you something that I just posted on the trading floor that perfectly sums it up. We had the same inflation, 7%, in December of 2021, and now it's November 2022, and we are at 7.1%. But all of a sudden, the market's expectation of inflation has become suddenly good, which is not actually, it doesn't make any sense, okay? Now, this doesn't mean that what the market is thinking of inflation is wrong. What I am saying is that the expectations of people are wrong, and people might be jumping onto the bullish camp a little way too early. Now, remember that even though we were expecting this squeeze up into the 4150, I already mentioned on the newsletter that after we get to this zone, it's going to be a very, very choppy ride. And in fact, up to this zone is where I'm expecting to take short positions in the market, okay? Because I think that the first, heading into the next year, the first half of 2023 is going to be a pretty terrible one for many of the companies, facing the brunt of a lot of these economic contractions that we've been seeing, supply chokes, not to mention unemployment that has been causing a lot of problems, okay? Even though they've been laying off people, it's still going to affect the bottom line and top line. So that's something that you have to keep at the back of your head when you're dealing with the stock market, because it's a forward-looking thing, and it's just super important, okay? So today, we already came back. We already squeezed and came back. Now we're hoping to get up into this 4150 to 4200 level if something dovish happens, and really start to consolidate here. And if we can consolidate here and start to reverse, I would be happy taking some bearish positions anywhere in this region. That means taking some bearish positions into January, into February or so, okay, as a hedge to my portfolio. Long term, I still think that we will rally from here, and if Powell comes in with some dovish expectations today, then that's going to set us up for a rally probably all the way into 4,300 even. That's a possibility, okay? So you have to be observing the price action based on what you see, and you'll have to make decisions based on what you see as well. One of the most important sectors that you'll be looking at will be financials as well. If a dovish Fed comes out, then this is very bullish for financials. Otherwise, financial are going to be tapped into this continued downward spiral here, or this continued sideways action here, which is not really going to be healthy. Okay. The other sector will be technology, right? Obviously, a dovish Fed would mean nice valuations coming back for a lot of these growth tech companies, a lot of the technology companies in general. So you also have to keep your focus on this other sector, right? You can ignore real estate. You can ignore utilities. Real estate maybe, but not really a sector that I really want to focus on, to be honest. Mainly because there's not a lot of like upside money to be made here. It's not a super volatile sector neither. Okay. Communication services has been in a very nice sideways channel, and I see this sector breaking out if we can get some bullish momentum going. And if we get a hawkish Fed, then expect industrials to be hit pretty hard. All right, this is one of the sectors that don't do well in a tight environment. Materials, not really important. Consumer discretionary, this is another one that we're seeing in terms of cyclicality. Cyclical stocks here. This is honestly a good sector to play out if we see liquidity flow back into the system. Right now, the market's quite illiquid. We're seeing a lot of money that has gone away, waiting to come back. And so those are just, honestly, some of the things that you have to keep your eyes on, okay? So the possibility of a squeeze today, pretty high. The possibility of a sell-off, also equally possible, but less likely. So I would say it's more skewed to the upside than the downside here. After yesterday, I can almost assure you that a lot of people that got squeezed up here, they didn't close out their puts. Because once they saw this, they probably thought to themselves, well, what if Powell says something stupid tomorrow? And I can tell you that a lot of people might have even doubled down on their puts, okay? I'm not talking on the institutional scale, I'm talking the retail scale. That's the reason why it doesn't really show up as much of a data point in our research. But I can almost guarantee you that there will be some people who have taken, doubled down on their bearish puts on this pullback here, hoping for Powell to say something stupid and then the market selling off. That is a very, very possible scenario that people would have bet on, okay? Not to mention the VIX yesterday. What just happened? Right there. The VIX yesterday also had a little hoo-ha, right? Sold off very, very aggressively from that 23 level, 25 level, came way back down again below 23. So temporarily fear was offline. And that was something that we were looking at, but the VIX, obviously was signaling a false breakout here, or a false breakdown. Bond market, not really, reacting in any specific way, but I've already gone ahead and started a long position on bonds with TLT 120 calls for June 16 of next year. I've taken a starter position on that one. It's not really going to be a full position until I come back down. Until TLT likely comes back down to 103, that's where I really want to add some more. And even if it comes back down to 101.50, I'll just keep adding around here in this zone to the upside, because I'm doing pretty much like a share replacement strategy where I'm going to be holding equity in terms of options contracts, almost like a leap. Okay. Dollar index continues to permeate to the bottom here, and I've spoke about this on the previous live stream. 103.50 is going to be a key level here for the dollar. If it continues to slide here, then remember that gold is going to start to rally, right? As you can see, there is a pretty big correlation between the two asset classes. So if you look at GLD, you'll see gold has been on the up and up. And the reason why it has been on the up and up is because of the weakness in the dollar. This is something that you should keep your eyes on. If the dollar continues to slide, gold is a very easy one to play as a counter trade to there. Yeah, a lot of people were betting on that continued downside on gold. But this would be on the up and up if we can continue to get that break. Now, gold is obviously at a very important spot right here, so keep your eyes on it. I wouldn't recommend going long outright here. Wait to see what happens to monetary policy and what happens to the dollar. If the dollar does indeed slide back down, then that could be a good entry for the next leg down, because that would send the dollar back down to 100-ish, and that will send gold up into at least around 175 or so for that next level, or that next climb to the upside. Okay. For those of you that heeded my advice with Tesla ever since we came up to $200, congratulations. I did mention that they have been very, very bearishly betting on Tesla. And I think a lot of people, once we got up to here, they were like, oh man, we're going to squeeze, we're going to go back up, we're going to go to 250. And they started betting very bullish on Tesla. And I've been warning you guys for a couple of weeks now on Tesla. I made an entire video and an entire pre-market dedicated with that Tesla was bearish. And we've been seeing a lot of options activity. So I hope that some of you made some money on Tesla over the past couple of weeks. We've been talking about this one an awful lot on our stream. And if you did, always remember, make sure you hit that subscribe and like button. How many of you have been making some money from this stream just by turning up, listening to what we have to say over here? How many of you been actually following along and making some money, feeling less directionless? I would love to hear your feedback. I really truly appreciate you guys taking your time out to be here. So yeah, I would love to know that you guys are also making money alongside with us. After all, this is something that we do to help you guys so that you can become better traders and investors alike. Okay, another one that is in a very, very nice setup is Apple. I like this setup very much. You have a clear level up here, 150.50, which is the upside pivot, and then you have the 140 level, which is the downside pivot, roughly. I think that, you know, this two levels would be your test levels. So breakout from here, breakout from here. This would be your rejection levels, and then this would be your confirmation for your rejection for downside. This is the confirmation for the upside. Gotta keep these pivots on lock, and I think you know, they will be a very defined breakout on Apple here. Wherever Apple breaks is where the index is going to follow. Remember that Apple market cap is somewhere around, what is it, $2.3 trillion, and Microsoft is somewhere around $1.9 trillion. So this is a big market cap and needle mover, so you got to keep your eyes on Apple. You confirmed my XLF play last month. That's nice, Rich. Tesla paid and helps me either create my bias or confirm mine. Thanks to you. No problem, man. Absolutely. So I'm glad. I'm really happy that at least it helps you out a little bit. Our aim here is to educate you guys as much as possible and put the important things ahead in front of you, so that, you know, you don't get too in your head. One of the things that causes traders a lot of problems is decision paralysis. Keep it simple. That's what I always say. Keep it simple. Keep yourself down limited to a couple of decisions. You don't need to make a whole lot of them. Obviously, yes, I follow a lot of tickers and I'm looking at them constantly. But remember, they're all grouped in certain sectors. Like, for example, Tesla and Shopify or NVDA or AMD. These are all grouped in that high beta cyclical sector, right? AMD is AMAT as well, Airbnb as well. And then you have Google, you have Microsoft, you have Apple, you have Meta, you have Amazon and Google. These are all, sorry, I said Google twice, and Netflix. You know, these are all your mega caps, and they are showing me the market direction. So remember to always wait for cadence, which is how the index is performing versus the individual stock. Wait for those confirmations as well before you take something. Like, for example, yesterday it was easy for us to go for the NVIDIA short right when it was up here. You know, we entered the short pretty much like around here, right here. And we played on this pullback. I added a little bit more to my position, and then all the way back down here. This is where I exited the short. Pretty much on that pullback, I let the stop loss stop me out over here, and that was the end of position right there. So, you know, very early on in the day, you're done with the position, and the only reason why this was possible was because we saw relative strength on you know, SPY being really weak, and getting rejected, not able to break out after CPI data, which typically has been the case. After that drop down, and also the cadence on NASDAQ the entire day, it was a very easy decision to make with the NVIDIA. And then along with that, if NASDAQ and you know, SPY are dropping, then it's a very easy move to make on Microsoft as well. These were two stocks that were easy to short because they had relative strength for the entire week. You can see that NVIDIA has been on a very massive uptrend, and was in need of a pullback. And that CPI catalyst, even though it shot it up to 187, it was a great time to take a short position to get it to come back to the mean level. And that's one of the reasons why we took this trade. Microsoft was a similar situation. Big breakout on the up and up, and the pullback was really needed in order for it to come down for this gap fill, for it to build another base here. So you got to also think in terms of you know, where the market makers positioning themselves and how you're going to take advantage of that. Okay, so these are just small things that I hope that you can take away from the live streams. Things that, you know, it takes years and years of practice, and you're thinking, you know, how am I supposed to master these skills and these crafts? What are the things that you really need to be a successful trader psychologically, mentally, and then your skill set in terms of just the day-to-day, right? And we hope to just, you know, give some insights on those things. Your info you give out about the CPI data and give the information is really helpful. That's great. I'm glad that it helped you out. I'm really glad. Yeah, okay, so somebody asked for a breakdown on QQQ. I'm gonna go ahead and do, okay, I'll do QQQ since this is the most asked one, I think. Actually, honestly, we could do NASDAQ because it's the same. So let's go ahead and do NASDAQ instead. So this is equivalent to NASDAQ, okay? Very similar looking chart. It's just this doesn't have gaps in it. If you look at QQQ versus versus Nasdaq 500 USD, it's the same thing. Only thing, this doesn't have the gaps. Okay. By the way, for you guys who don't understand why I use SPX 500 USD or NAS 100 USD by Oanda instead of using SPY and QQQ, one of the reasons is because these are traded across all of the markets around the world. For example, if US opens, US closes, there are no gaps in between these charts. Okay. For example, my SPX chart, it doesn't have any gaps. From session to session, it'll open and close from each session. So if US closes and Asia opens the next few hours, this chart will reflect that change, and it will have no gaps, almost no gaps. When there is a gap on this chart, there's usually a very important or interesting phenomenon that happens. Okay. So for those of you that are not already using these charts, you probably should think about switching over to a chart that covers all of the time frames across all of the time zones, instead of using QQQ and SPY, where you're constantly guessing to yourself, is this going to gap up or down? You have all of the price action already laid out for you. Okay, so just a quick little tidbit for you guys. Okay, so on QQQ, and it's a very similar situation here with Nasdaq, right? Which is the case. We are still in that box range. We tried very hard to break out yesterday, and we came back to squeeze into it. We have been flirting with this trend line, which we have been attempting to break out of multiple times, and not quite. We just haven't quite done this. Now, there are obviously a couple of reasons, and I don't think I'm going to be able to cover all of the reasons, but a lot of it has to do with options flow yesterday. Okay, we have $3.9 trillion that are expiring this week. A lot of exposure preventing us to climb over the 4100 level, or the 4150 level on SPX. Okay, you can see we got rejected here. Why did we get rejected here, and why are people taking profits to push SPX down? It's because they are incentivized to keep SPX down through this period of time. There must be a lot of exposure being taken on options in this area, right? So people must be betting on a lot of outcomes either in this area or below it for the SPX to be suppressed in this zone. You got to always think like a market maker, okay? When there is an incentive for the market maker to make money up here, then they will start to push prices there, right? But we didn't see this yesterday. We saw a lot of profit taking and then no incentive or carry forward momentum to push the market back up. And through the data, we can actually see, yesterday I was looking at it post-market, a lot of the price action was pinned around the 4100 level. In fact, just a blurb from our friends at Goldman Sachs confirmed this. They said that the options expiry prevented a move to the top side because we were pinned pretty much by the expiry on Friday, which is a $3.9 trillion expiry week. It's quarterly expiry. Okay. Obviously, we saw a lot of people take profits immediately, but the most important and prominent difference between this CPI and the CPI prior to this one is that there were no shorts that were unwound. In other words, people were not covering shorts. That was a big one. Okay. In other words, they decided to hold their shorts. Why? Because they probably were waiting for Powell. Okay. And that's one of the differences in this CPI. They didn't know what Powell's going to say today, and so they wanted to hold off. So taking that into account, I think today is really pretty much a day where you got to wait for the press conference to be on, and then after the press conference is done, let the market make its move, and we'll have a better and clearer picture on Friday pre-market when we get onto the last stream of the week. To try and guess if we're going to go up and down, you're going to pull your hair out of your scalp. Trust me, okay? I myself don't even try to guess. It's pointless. Trying to guess whether we're going to go up or down, what is Powell going to say, this and that. There are too many nuances to even predict. You can bog yourself down with all of the technical patterns, but you're not going to be able to get the right answer until it actually happens. So stop trying to predict where it's going to go. Just be prepared for all of the outcomes. If we start to rally very strongly into the 4150, 4200, then I will definitely be looking to engage some short positions up into this area if we can see some rejection. Like, for example, a big wick, right? If we start to break through this level and get up into 43 level, then I'll probably take some shorts up here. So it's all going to depend on where we start to reverse and where we start to pivot. I'll be watching closely for that. If we go the other way and we start breaking down below, then we have to ask ourselves, how far down below? Are we breaking the 3900, which has been the stubborn support for various months now? Are we getting to 3800 and bouncing there? So all of these questions have to be answered before you make your next move. All right. And that's just the nature of trading. Sometimes it's going to be boring. You're going to have to wait around for your hypothesis to be confirmed. All right. So yeah, that's all I have for you guys today. Wait for the outcomes. Stop trying to trade around it. Tesla also continued bearish flow came in for some 140 puts yesterday. I don't know if that continuation is going to happen immediately, but they were very aggressively betting on 140s, 150s yesterday, even 160s. And Tesla just broke a major support here, which was a key level. So we'll see if it can continue to slide down into the 130, 140 here, which is going to be the next support level. Alright guys, well, I hope that you guys have a great trading day. Once again, if you can, I truly will appreciate you guys a lot if you can smack that like button right before you leave. If you're on the YouTube app, it really takes you 1 second to do it, and it's going to help me out tremendously. The algorithm's not going to share this video with other people if you don't help me out with that. And of course, if you have friends that are struggling with trading and they need a good pre-market breakdown, it doesn't hurt to share our stream with them. There's a ton of free content on our YouTube channel as well. Go check that out. It's gonna be better than any other content that you have out there, classroom style, and very succinct. So we'll see you guys back on Friday again for another pre-market session here, and of course it'll be post Powell. So we'll be ready with the breakdown, and we'll brief you back then on the developments after. Have a great trading session. Peace out, and yeah, love you guys. Bye.